Hey everyone, tonight's going to be a little bit of a unique video lesson as I want to talk about how I review trades that I've lost on. This is extremely important. As a stock trader, you without fail will have losing trades sometimes. Now obviously the goal is to minimize those trades, always have tight stop losses, so when you do lose on those trades, they're very minimal losses. And then the most important part about it is you want to learn from it. You want to evaluate it. Why didn't it work out? What were you seeing? What did you not see? What did you miss? You know, what was it? Was it something with the catalyst that you thought would do something different? You got to analyze, you got to ask yourself these questions so that way you can learn and avoid making the same mistake in the future. Okay, there's a huge learning curve in the stock market, and even the people who are at the very, 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 very top of the stock market, trading at an extremely elite level, they're still learning, and they will have practices like this to evaluate trades. Okay, so I want to show you guys how I do that today. This is my website, kfinvesting.com. If you want to join us, come hop in the chat room, fill out this form here, and put your email here, and I'll email you the instructions to get into the chat room. We'd love to have you join us. So now let's get into the trade I want to talk about today, which was MRNS. You can ignore this here, actually. I'll erase that. This was a bull flag pattern that we bought over the break of 493, and it was incredible. It's an awesome trade. It's also good to review your winning trades, just like there we go, remove drawing, sorry. Just like we're about to review a losing trade. The losing trade today was this. Let me narrow this down a little bit more for y'all to see. We had intraday resistance here on MRNS right here at 594. Okay, you see the high of this candle right here, 594. All right, so let me label that for you all so you guys can see this here. Here's the resistance I wanted to buy this over. Okay, I was very aware of this resistance back here at 597. I'm also going to draw this resistance so you can pay attention. Okay, now you see these resistance levels are extremely close together. Okay, but I decided I wanted to buy this intraday resistance at 594, and I decided I want to do that for a couple of reasons. Okay, one, look at this volume. This volume is fantastic, and I was confident that on the break of 594, similar volume would come in, and we did get pretty good volume here. We got some solid volume, but it wasn't quite what I expected it to be on the break of 594. And I was hoping for that volume to break through, just blast through both levels of resistance here. If it's a hot market day, you know, low price stocks, small caps are running, you can get that often. You can take a little bit of a risk buying the resistance before to explode through both levels. Now the problem was today was an extremely slow day in the stock market for small caps. It was just a tough day for a lot of traders. It was weird. For example, in the chat room, we had probably 10 different trading plans, and for the first hour of the market, we were ready, just waiting, and nothing ran up to trigger, nothing went over the resistance levels we wanted to buy. It was just a really, really slow day. So I made the mistake. I should have taken that into consideration more, that it was such a slow day. It was a weird day. I should have been able to see that, you know what, I should play it extra safe and wait for the break of 597. But I didn't. I got in a little bit early. I ended up getting triggered right here. I had a stop loss at 579, which is right here. So I traded with a very tight stop loss, only 15, 16 cents there. I got out and I lived to trade another day. Okay, and now I have this opportunity to learn from it to hopefully not make the same mistake again. That's what trading is about. It's about having tight stop losses, cutting your losses quickly if the trade doesn't go like you thought it would, and then learning from it, analyzing it just like we're doing today. Okay, so in the future, if I could go back and replay this trade, one, I would realize that this is a slow stock market day. Now there's still some great action here from 525 all the way up to 594. That's incredible and great action. But in the future, I can look at this and say, you know what? I'm not going to try and do a buy on the break of this first level of resistance, hoping the momentum is going to carry us through for a huge trade. There was great potential on this. Had this have gone through 597 and 6 with the momentum that I thought was going to come in, this could have really gotten very hot, and it would have been a big trade. So the reward, you know, up in near 630 or so for profit is well worth the risk here at 579, which is where I cut losses at. So it's important to keep all these things in consideration. What's the market trading like today? The last 2 or 3 days, IDIS, Isaiah, and Himni have just been going nuts, and they're all similar price stocks to this. So that's another reason why I bought this. I thought, you know what, these types of stocks are running like crazy recently. I think this is going to have that momentum to carry through. So I took into consideration the last couple days, but what I didn't take into consideration was how slow this morning was. So anyways, here's the trade, MRNS. It's important to be transparent with all your trades that you're making, okay? Because you need to own up to yourself. You know, if you've made a mistake, say, hey, I made a mistake here. I can be better here. I can change that. I can improve here. It's important to own up to those. There's a lot of traders who will, you know, kind of claim that they don't, you know, they'll hide their losses and brag about their gains. I don't believe in that. I think it's somewhat cowardly, and I don't like that idea. I think it's important to own up, because the truth is you can get a lot better that way. When you're honest about it, you accept any mistakes you made. That's how you get better as a trader. So anyways, I hope this video lesson was helpful about how to analyze a trade that perhaps went wrong. I win over 80% of the trades that I make. It's between 80 and 85%. That's an extremely high percentage. I love to review my winning trades, but just as important as reviewing my winning trades, even though it might not be quite as fun, it's critical that I go back and review any losing trades I potentially have. In this case today was MRNS. So I hope this is helpful. We're all on the same team. We're all trying to, you know, make money in the stock market. So if you can learn from my mistakes, then I'm extremely happy about that. If you're studying, paying attention to these things. So come join us in the chat room if you want a chat room that's genuine, honest, straightforward, and transparent, and that cares about making you a better trader. We'd love to have you.